Welcome to News You Can Use, presented by Supreme Lending. News You Can Use offers timely information related to the housing and housing finance industry that we believe will benefit you and your customers. This is News You Can Use.
A house divided against itself, it cannot stand. That's at home, your home life, that's in the workplace, that's in the community, and it's in our nation. If we're divided against each other, we will not stand. We won't find the best of ourselves as a family, as a workplace, as a community, and as a nation. Black, white, brown, Democrat, Republican, rich, poor, believe it or not. Yes, we're all from different places and we have different beliefs. And yes, we all have a choice to make about how we not only accept others, but how we not judge others. We also have a choice to forgive others. We have a choice to love others, even if they're unlovable, and even if they don't believe what we believe or vote the way we vote. My goodness gracious, we do have a chance to love, choose that path and that road, and not hate. And if we do that, we can bring our house together at home, work, in the community, a nation. And so, my life philosophy, and I hope you'll adopt it with me, is that I am for everyone. I'm not for everything, but I am for everyone. And I think all of us, if you really are honest with yourself, you're not for everything either, but we can still be for everyone. And we should be. And if we do choose to be our best, we will be for everyone. All right, let's rock and roll, kick into News You Can Use. We said when COVID-19, when we put ourselves in a COVID coma, that we would need several things to happen to be able to be restored and recover on the road to recovery. First, we'd need monetary policy. The Federal Reserve, which has dual mandate, full employment, which we're not at anymore, and they also have a mandate to keep inflation below 2% so we can have a long-term growing economy. The Fed has done an amazing job. We said it over and over again, and they are lurking. If they need to give additional help, they have told us that they will. They've used everything in the toolbox, and they've created some new tools. Good for them and good for us as a result of their work. We also said that Washington would need to do its part, that we would need to have them subsidize this period when we were in an economic coma as a result of COVID. Frankly, at this point, hard to believe, but they collaborated and we got a number of different stimulus bills passed that have created all types of different types of support, whether it's for an individual with unemployment, increased benefits, whether or not it was the PPP, which has now been extended. We'll get to that in a second. But the reality of it is that they've done a nice job at this point with the stimulus plan, putting money in people's pockets at the time when they needed it. Now, we don't have a place to spend it necessarily because, well, things have changed. Hopefully that will change again soon. Just this past weekend, the president extended the PPP program, which is the program where employers actually are paid so that they can keep people on payroll, pay their rents, as long as they pay certain things, keep people on the payroll, don't lay people off, then they get the funding. So that has now been extended. That gives us another month or two through August 8th, which is good news because that gives the economy time to heal on its own, right? We need to get people back to work, and that obviously started a couple of months ago. And then there's some other challenges, and let's get to them, right? Because the bottom line is we shut down, and we did so because we thought we needed to flatten the curve, slow the growth so that we could get both medically and otherwise control of an event. We didn't want to run out of hospital beds, and we needed to give our medical field time to get a vaccine, time to get treatments for a disease, COVID-19, that we had not experienced before. And that's still a work in progress. But we did, in fact, restart the economy. We just couldn't keep closed any longer. It's not the nature of people to just live indoors forever. but it was also true that we had gone from 3.5% unemployment when we started the year to 13.7% 2 months ago, which was the highest number on record since the Great Depression. So we did need to get started again. Of course, the timing and how quickly we open and what do we open first has been a grand debate, and the media continues to be a debate. Truth is, we are reopened. In some cases, we pull back a little bit. In some cases, we're slowing down on the reopening, but we are moving towards getting back to the economy working again the way it was prior. Hopefully, we're going to get there. Again, the shape of the recovery, and we'll go through some slides here to give you some indication of what it looks like now. The V, victory, is what we all hope for. That's the immediate bounce back. We're starting to see that that's not necessarily going to be the outcome, except in our business and housing. We'll get to that in a minute. Linger at the bottom and then bounce back. That would be an acceptable outcome. In fact, we're hoping that we get either a V or a U. Let me tell you what we don't want is a W. We don't want that, and that is that we have the downturn, we've had it. We climb up and then we go back down again only to climb back out. Roller coasters were fun when we were young. They're not fun any longer. So that W looks a bit like a roller coaster. Let's stay off the roller coaster if we can. Nike, as we've said, the amazing, awesome marketing company that it is, they found their way into the shape of the recovery. That's the swoosh, where we go down, which we did, and then it just planes out over time. We do come back, but it just takes a much longer period of time as opposed to the V or the U. And then finally, the last thing we want, the last thing we want is an L-shaped, which is we go down and the economy never recovers. So let's take a look at what we're watching. Of course, if you've been following our program, I know we're in a different era. You know we're in a different era for a lot of reasons. One of them is because we're actually watching the behavior of people on their phones, because getting driving application directions, walking directions, those things are indications as people are out and about. And since they track us, they are finding out that we were out and about. And then in March, we went home, apparently, and stayed there for a while. And now we're starting to come back. So you can start seeing the shape of this recovery. Of course, that doesn't mean everything in the economy is doing the same thing. That's why we'll show you a couple of other slides now. But we are starting to see an increase in activities there. Restaurant bookings, of course, they went down to none. All right, nobody was booking restaurants. And in May, we reopened, and we're slowly but surely starting to see a climb. Of course, we flattened out in the last couple of weeks. The news regarding Corona, COVID-19 is back, if you will. So that will probably temper the recovery a bit. But we are seeing, in fact, an increase in restaurant bookings, which is good news, especially if you're in the restaurant business. Hotel occupancy rates, starting to see a nice incline. This looks a bit like the Nike swoosh, and we'll get back to those shapes here in just a minute, but we are starting to see that that's taking place. As we get more information about things like what really transmits the disease, we find out that if you're in a room and somebody else was in the room and it's been cleaned, it's not necessarily going to be true that you're going to get it. So as some of those myths get replaced by actual facts and science, then I think behavior will continue to be affected, good and bad, right? U.S. air travel, let's face it, if you don't have to fly today, you're not going to fly today. And I had every year gone up to Boston and Newport, Rhode Island and Nantucket for our anniversary, which is the end of this month. Well, you know, if I go up there now, they're going to want to keep me because I'm from Georgia, so we decided we're not going to go. A lot of people have canceled, but we're starting to see a slow recovery here even, and that's as a result of businesses opening up again. It's as a result of the summertime vacations when people normally go on vacations. These numbers would normally go all the way to the left of the graph so you can see how far down we are in the travel business, and this will be an interesting one to watch because from my vantage point, when people start really feeling comfortable again, they will go to the airport, they'll get on a plane, they'll go visit family or really cool places that they want to go to that maybe they haven't been able to go to in a while. Good news is the best chart we have to show you in terms of closest to a V, maybe it's a little bit like a VU, but we'll take either one of those as we've already said, and that's U.S. home purchases. They did what we thought they would have done. They went way down, just like the V would show us. Then they did what we didn't necessarily think they would do, go way up. And in fact, they are now past the level of activity that we had pre-COVID. So we actually have more demand today than we had pre-COVID just a couple of months ago. And keep in mind, pre-COVID, 3.5% unemployment. Today, 11.1, better than it was at 13.7, but 11.1. And demand for housing, which you do need a job for, is in fact better today than it was pre-COVID. So that's an indication we can actually make a V or a U recovery on all fronts if we can simply get past the disease. That's what we got to do. And the sooner we get there, the better. So the bottom line is people with jobs are finding their way into housing. And as long as there's financing available and we're open for business, then we're connecting and we're seeing that business actually work. I want to just remind you of what really drives our business. And there's a couple of different things that drive it. First is demographics, the number of households in America, and the number of people in America make up the number of households. In 2010, we had just below 310 million. Today, we have 330 million Americans. And so as this number continues to grow, and there's more Americans either through birth or through immigration, we wind up having a higher demand for both rentals of roofs and owners of roofs. And of course, those that can own a roof try to own a roof and get to own a roof ultimately. And so these demographics are favorable. And by the way, up until recently, your market, Florida, our market, Georgia, and North Carolina, all three of those markets were growing an average of over 300 new people a day moving from other places around the country. And in Florida's case, it was 900 a day. Of course, this recent kick up of corona cases, particularly in Florida, may cool that for a minute, but I don't think it's going to change what has been a long-term trend of demographics, and that is to move from north to south. We expect that that is going to continue. The other thing that drives housing is the cost of money. When you buy a home, there's the cost of the home, and then when you borrow, there is the cost of the money. We are now at historical lows on interest rates. And of course, as we've told you, and we'll tell you again today, that depends on your profile, how low that rate is. It's not a one-size-fits-all deal. But the base rate on a 30-year fixed rate mortgage in America today, the base rate is the lowest it has ever been, which is amazing news for our business. And so the combination of demographics, the combination of who lost a job, the combination of the lowest interest rates ever is fueling this run that we currently have in housing. There's some things that are still a problem in housing. We don't have enough inventory, and we will run out at some point if we don't get more people to come onto the market with their houses so that people can come and look at their houses to buy their houses. And that has to do with, of course, COVID. It always comes back to that, right? This whole event has been about COVID. All we're talking about the road to recovery is the people that need to play a role in making sure that we get there quickest and best VU. And that would have been the Fed and Washington, check, check. And now it's a question of we got to get the disease to get under control so people feel comfortable to go back to normal behavior, which drives the economy and will ultimately drive our industry long-term as well. All right, let's look at the positive jobs report last week. It was a big surprise. We expected it to get better, but not this big. And we had a couple mixed messages in the jobs reports last week. We had weekly jobless claims. They went up a little bit from the previous week, okay? Long-term unemployment, weekly unemployment, long-term came down a bit, but that was kind of a neutral report. And then on Thursday, we got a jobs report because Friday was a national holiday. And it blew up expectations, I mean, in a positive way. We went from 13.7 to 11.1. We added 4 million jobs in 1 month. So this is the kind of chart we want to see, not March, April, but April to June. And we need to continue to see these trend lines moving down throughout the balance of the summer and into the fall if our industry, housing, and if the overall economy is going to continue to get better. We went from 3.5, if you take a look at this chart, the lowest in history, 3.5. We went to 4, and that was the early read on unemployment. If you remember, that was when we first closed down, so we only had a couple weeks of the coma, if you will, in March to report. Then we went and took the full brunt of 14.7, and then we turned, the curve flattened, and now actually is in a decline. And we like this graph, and we like it to continue to move in this direction so long as this most recent flare-up, if you will, of new cases doesn't turn into something materially worse. One of the things that we are cautioning about in terms of this road to recovery is that the jobs report came out, but the last 10 days of June is when we saw the real flare-up of new corona cases. And it happened through the weekend, of course, as well, where we were printing records, not the kind of records we want, of new cases of corona, COVID-19 being confirmed. So we're holding our collective breaths, of course, about what all that means. Not only are we hoping it, we're praying it, and we have some reason to potentially believe that we might get through this thing okay. Love this picture. Thank you, Ty, my great producer here. He's always got a great way of saying with a picture what we're about to say. The media, of course, is reporting all these new cases and trying to convince us to stay home. And I'm not saying they're wrong. The cases are accurate, okay? The economy is wanting to get on with itself, right, and get back to being a thriving economy. And so we got these kind of mixed messages, if you will, going on. The reality of it is the media is reporting what's true, is that there is a massive number of new cases. We're now breaking through records of new cases. That's not the kind of record we wanted to break, but it is understandable. We opened the economy. The virus didn't go away because we did, just because we went into a coma and went home and stayed home for a while. That was to flatten the curve so that we didn't overrun our hospitals, so we could get more medical devices and equipment available to all of our hospitals. That was so we could get prepared, work on treatments for a bit, right? And we did that, and then the reopening had to happen because we could not stay closed any longer. The virus did not go away. So it's now just getting exposed. And I know everybody is yelling and screaming at people without masks and yelling and screaming at people for getting together in crowds. And so we all have opinions about that. But remember, I'm not for them not wearing masks, and I'm not for them gathering in crowds, but I'm still for them. But I'm against maybe some of the things they're doing, but I'm still for them. And if we can just stay there, we won't have as much anger, if you will, towards others, which, you know, anger leads to hate, you know, empathy and understanding leads to trust. And maybe some of the stuff we don't fully understand, but we should just continue to focus on trying to love our neighbors, even if they're not so lovable at times. All right. So the 4th of July came. We're setting records, certainly Florida, Texas, Arizona, California, all showing lots of new cases. Here's the real issue that we're focusing on now. That's true. Look at the number of new cases. You just see it by week, right? We're at a high point now. So when this started, our high point was just over 200,000. Last week we had 302,000. That set a record from the previous week. So the last 2 weeks in our country, the end of the month, that's why the unemployment numbers were a bit concerned, because as this happens, we slow the rollout of the economy. We actually shut some bars down again in Florida and otherwise. So we're tempering that. So what does that do to unemployment in the next 30 days? We'll find out. We'll share it with you. But here's what we think, and we're not scientists, but we are driven by data. And we study a ton of data, and we've studied a ton of data. So cases themselves are one issue. Like if you were to find out that you had COVID-19, you wouldn't be like excited, right? Neither would I. But then if someone says, hey, but you're not going to even get any symptoms, or you'll get some symptoms, you'll get the flu and you'll be home for 2 weeks, but then you'll be okay. You and I would say, okay, that's not the end of the world, is it? Really, the next level is go to the hospital. You're that sick. And then the next level is if you're that sick, you could potentially die. So hospitalizations are a big deal in this story. The last 2 weeks, case numbers have gone up. The next 2 weeks, we're watching hospitalization numbers, because if those go up at the same rate as the case numbers, we got a bigger problem on our hands. And now we're not looking at a V or a U recovery. We're looking at something other than that. Let's hope and pray that that's not the case. If the data that we've seen to date about who's getting COVID and how often they've gone to the hospital and how often they've died, if those numbers hold from what we've seen so far through the second week of June, these new cases, as an example, in Florida, the average age of the new case is under 35. If you look at the numbers prior to the last 2 weeks, not the case numbers, we've already said they're records, last 2 weeks. But if you look at the previous data on those that are 35-year-old Americans who have been diagnosed COVID-19, how many go to the hospital and how many die? If you look at the numbers of 20 to 30-year-olds and 40 to 50-year-olds, what you'll find is that the relative numbers are really low of hospitalizations and even lower as you go down the age on deaths. And if these numbers hold, then the story of new cases will continue to probably underwrite records, but we're not going to overrun the hospitals and we're not going to go back to see the number of deaths that we were seeing. And this is the truth. Ready? Here it is. This is the mortality for those of COVID-19. If you look at the numbers, you see kind of the influenza, if you will, pneumonia, normal rates of death over the last 2.5 years, right? You get a little bit in 18 of a kick up, right? Seasonality, et cetera. And then you all of a sudden get in 2020 and you realize, wow, there's a thing called COVID-19. It's new. We don't have a way to treat it. We didn't have a vaccine for it. Look out. And that's what happened. We ran up the death numbers. We ran up to basically 2,800 a day. That's what 2,700, excuse me, a day. That was the high point. May 6th in our country, we reported 2,701 COVID-19 deaths on May 6th. On July 2nd, 212. Let me say those numbers again just to give you context, okay? The last 2 weeks, we've set up record weeks in COVID-19. We go back to May 6th to find the record for deaths per day, and now we're down to the lowest point we've had since the entire event started at 212. We will hope, all of us, and we should all hope, and we should all, those who do, pray that these numbers stay and that we don't see hospitalizations increase and that we don't see death numbers increase. And the reason we don't want to do that is because we love our neighbors. We don't want to see anybody hospitalized and we don't want to see anybody die. The other thing is the economy will continue to rebound because people will get confident that even if they get COVID, they're not going to have to go to the hospital and they're not going to die from it. Unless you're 75 years old, in which case you need to take the time to continue to quarantine and stay at home. And why is that? Because you are at risk, and that's what the data has been telling us all along. We didn't know that early on, that it was particularly attacking older folks with underlying. Now we know. And so that we know, that group needs to stay quarantined, and the balance of us just need to be very careful, as most of us have been. And then we need to hope and pray that the numbers, as I've already described, hospitalizations and deaths, don't change. So what we're watching for our industry is showings. So we're actually seeing a rebound. We're now up 14% from where we were. That is real estate showings from the pandemic beginning. So there was the beginning of the pandemic. We were off to a really good housing market, and then we're up 14% since then, and we're up 8% higher than at this time last year. Even with the middle of this coronavirus event taking place, we're still up 8%. And for housing to be up year over year, 8%, that's an amazing story. So imagine if we get this corona thing behind us, right? Imagine if we get the corona thing behind us, what we'll be doing. All right, we showed you a picture earlier about the media and then about the economy, right? We want to show you another picture that we think makes sense, and that is your credit score or your customer's credit score and home buyer, right? So the home buyer, the buyers that are working with you today that want to buy, the only thing that can hold them down, one of the only things that can hold them down is a credit score not being where it otherwise needs to be able to get access to credit and to be able to get it at the lowest cost possible. News you can use. We created a program. It's called Credit Essentials for Home Buyers with Lisa Myers. It airs every Friday. It's about to start to air on Saturdays. Yes, that's right. We're adding a second day, Saturday, for those that cannot go on Fridays because they are working, right? We've gotten a lot of good feedback. We've had large audiences. We're now going to move to Saturdays, so those that can't necessarily do it during the week have another option. And then we're talking about doing one during the middle of the week as well, like a Wednesday evening. We'll get back to you on that. But the new program for Credit Essentials, we'll still do Friday, but we're going to do this Saturday as well. So that'll be our first Saturday program, and we'll get back to you on schedule next time we meet here next week. Let's give you another scenario, because I said earlier that interest rates are not a one-size-fits-all. The base rate in America is the lowest it's ever been. But then what happens is, depending upon the customer's profile, how much money they put down, what their credit score is, what kind of property they buy, single family, condo, whether it's for owner occupancy or whether it's for rental, all of those things, how much money they put down, factor in to the interest rate. And all of those things, with less money down, with lower credit scores, they drive the cost of money higher. So what can we do about that? You can go to our Credit Essentials program and get your credit score to go higher. We're averaging now almost 50 points when people go to our program and follow through. They go up almost 50 points. And let's take a look at what that actually looks like. This is a VA mortgage. If you have a 620 credit score on a VA mortgage today, you pay 5%. I know you're thinking, wow, that's really high. That's the impact of credit scores that are lower. Look at what happens from 620 to 640 on your credit score. The rate goes from 5 to 4 1/8. Imagine if it went to 700, 720. That's right, it continues to go lower and lower and lower, and there's no reason to not get your customers into Credit Essentials with Lisa Myers, the Credit Whisperer, so we can then teach them how their credit score actually is compiled, and then give them detail about what they can do to increase their credit score, and then they can lower their cost of money. And we're talking about, on the scenario I just showed you, just 20 points, and we're averaging almost 50 improvement in credit scores. 20 points will save you $130 a month. Your customer, I should say, will save $130 a month in payments. $130. Imagine the satisfaction rate of your customer and our customer. By meeting you, they not only got a home, great, that's what they wanted to get, but if we're in the business of relationships and building value and customer service and building raving fans that will refer us in the future, come back with friends and family member, we got to do more. This is it. This is one of the things we can do to improve their payment by $130 a month, and that's only with 20 points. At 40, it's a lot more than that. Let's go to work. Let's make sure the Credit Essentials gets a full crowd this Friday and Saturday, so that we take your customers and give them a lot more energy for referring you in the future. Regardless of the scenario, no matter what, when you send your customers to our program, they're going to wind up feeling better about themselves, because they'll learn about credit. They'll take those learnings with them in the rest of their life, and they will pay less for credit cards, auto loans, and mortgage loans as a result of you referring them to Supreme, and Supreme having thought, because our mission is serving others before self. How can we serve? And this is one of the ways that we can serve, by offering expertise and insight about how to improve credit, so ultimately customers can pay less and get done what they want to do, become homeowners. All right, let's move to our customer service stats, and they say everything that needs to be said, but I'll tell you the details. 98.31% of customers that do business with Supreme were satisfied. 98.3%. I would argue that the 1.7, maybe they just can't be satisfied. We're trying really hard to get that last 1.7% so we get to 100%. Close on time, fund on time, so you get paid on time. How about that, right? And we really focus on these measurements. Why? Because they matter. When people, buyers and sellers, want to move, they don't want to hear all the reasons they can't. It doesn't even matter if they're good reasons. They just want to move the day they want to move. We got to be there with the money to make the transaction actually happen, because as you know, nobody gets paid, nobody gets to move until the money shows up. So close on time, fund on time. Over 99% of the time, we close on time, and we fund on time. And then finally, Supreme Speed. We are still open to close loans in July right now. Okay, so we just passed July 4th weekend. Here we are on July 6th. Is that what today's date is? Yes, it is. It's July 6th. How about that? And if you'll send us your referrals today, you'll send us contracts today, we will easily close them in the month of July. We can close loans in as low as 8 days. The government won't let us go faster, or we would. So we are open for business. And by the way, juxtaposed our score of being able to do loans, our average is 21 days, and we could do them as low as 8. Juxtapose that with the nation's average. Like I said, the nation looks like they're making wine 50 days. I like drinking wine, but I don't think we should be taking loan applications and trying to make wine out of them. There's plenty of places that sell wine that you can go buy wine. What we should be doing is we should be getting customers from where they are wanting to buy a home to closed as quickly as we possibly can, so you can get paid on time and as quickly as we possibly can get you paid. By the way, that's our car. We put you in that if you need to go in 8 days or 9 days or 10 days. It drives really fast. There's no one in it right now. I need somebody in the car. So I need you to send your customer in so we can put them in the car and drive them really fast to the finish line. Supreme Rescue Service. What is that? Well, it looks like a Dyson vacuum to me. Pretty good one. Anyway, the Supreme Rescue Service is, we have the best, honestly, loan surgeons in the country. And we make them available to our LO population, our loan officer population. If you got a loan and it's got a problem someplace else, refer it to your LO that's in your account, and we will then assess it and decide whether or not there is a pathway for it to get done. If we say go, we will get that loan in, close it in 8 days. That's what Supreme Rescue Service is about, and we do this every single month. That is, we rescue business every single month from other lenders that simply haven't figured out what they're doing with the loan yet. And that's not a good place for you and your paycheck, and not a good place for your customer to actually be living. You know what? I've been on this planet for some time, and I'll tell you, I've been in this nation, this great, great, great nation. Our nation isn't great because of its performance. Our nation is great because of its idea, the idea of all men are created equal, the idea of everyone has an opportunity in this country. That's the thing that's great about America. It's not the performance, because if any of us individually and then as a nation, if we want to stand the test of being scrutinized, most of us will come up short, right? There's the person I want to be, Patrick Sean Flood, and then there's the person I am, and there's a gap between those two. But I still want to be that person, which would be better. And that's the way I think about our country today. We need to get back, all of us, every single one of us, to doing our personal part to make the idea of America closer to reality. And every single one of us, starting with me and you, can do our part to make this country a little bit better starting today. If we'll be for everyone. You still don't have to be for everything. We don't have to agree with everyone about everything. And in fact, we won't. But we can still be for everyone. And I really hope you'll embrace that idea, because then when you see your neighbors, black, brown, white, Republican, Democrat, rich, poor, you will come to terms with the idea that, of course, we're different. We look different. We have different places we've been in life, different experiences. But you know what? We can still love on each other. We can still be for each other. And if we'll love on each other and be for each other, then the idea of America and where we are will draw closer. That's what I hope and pray today for myself, and it's what I hope and pray for you. It's what I hope and pray for all of us. This is another chapter in the story of COVID-19 offered to you by News You Can Use, and we'll look forward to seeing you again next week.